Bloomberg Audio Studios. Podcasts, radio, news. This is the Bloomberg Surveillance Podcast. Catch us live weekdays at 7 a.m. Eastern on Apple CarPlay or Android Auto with the Bloomberg Business app. Listen on demand wherever you get your podcasts or watch us live on YouTube.
I can't emphasize enough, folks, and we learned this decades ago with Bloomberg on the Economy, you make your luck. Paul and I are committed to getting voices. We don't know when we need them. Right now, we get lucky. We have Mona Mahajan with us with Edward Jones. She has the most prestigious finance computer degree in America. Good morning, Palo Alto. This is out of Wharton School. The double degree finance and computer science is Mr. Zuckerberg blows up AI. Mona, we're going to rip up the script here with you, and don't give me a you can do it. I know that. What do you tell Edward Jones producers and clients about the plan of AI? Is there a path, or are we making it up as we go in America?
Yeah, thanks, Tom. And look, AI, we think, is here to stay. There is certainly a roadmap ahead of us that looks, in our view, pretty robust. And in fact, we're in year 3 of the AI we think, cycle or super cycle. And in fact, ChatGPT was launched almost 3 years ago this month. And so as we look forward, what we tell our clients is, look, we've had 3 years of tech and AI outperforming the rest of the market, and 2025 was no exception. As we look into 2026 and beyond, yes, we want to own parts of the tech and AI market, but we want to make sure that we have diversification in our portfolios, because yes, right. AI starts with infrastructure players, hyperscalers, data centers, but hopefully over time it goes to those sectors that benefit from the productivity gains. And that's where we'll see some of the market gains as well. With
the geography, the history, the character of Edward Jones, is America, through the filter of Edward Jones, buying the AI story?
Certainly, as we look across industries and sectors, we are starting to see AI adoption ramp up. So we are continuing to feel like this is a story that is here to stay. And we liken it to what we saw back in the late 90s with the internet and .com revolution. Now, we would say probably, and I heard Dan Ives on your station talk about it's a 95 era. We'd probably say we're a little bit further along, maybe 96, 97. But nonetheless, we think that this is a technological innovation that will have impact on all sectors and all industries and the job market, by the way, as well.
Mona, we've had some really, really good earnings growth coming out of corporate America this year. The third quarter numbers are really strong in particular. Is the earnings growth story good enough to support this market going forward in 26?
Yeah, it's a great call out. Look, S&P 500 returns are typically driven by two things. One, earnings growth. 2, valuation expansion. And so as we look out in the year ahead, the scope for valuation expansion, in our view, isn't as strong, especially in those parts of the market that have already experienced tremendous kind of valuation gains. And most of those are in the growth and tech parts of the market. There are parts of the market that probably will benefit as the Fed continues to cut rates to see valuation expansion. But the main leg of the stool that we're leaning on for gains going forward is earnings growth, to your point. And in fact, we're ending 2025 with a pretty strong, almost 10% earnings growth picture. And we're looking at 2026 and seeing another potential double-digit year for S&P earnings growth. So not a bad backdrop in that from that perspective, from a market gains outlook.
So, Mona, talk to us about, we're going to hear from the Fed next Wednesday, when Bloomberg will have full coverage of that, of course. How important is the rate cutting cycle to stocks in 2026? I'm not sure what's been baked in and what hasn't been.
Yeah, we think that markets are pricing in a Fed that is going to take the Fed funds rate to a neutral level. And we think that's a reasonable base case. At 4% or so, we're still relatively restrictive. If you think inflation ends up in this 2.5% to 3% range, or maybe over time, 2.5%, historically, the Fed likes to bring rates about 100 basis points above inflation. So anywhere in this 3.5% range, we think makes sense for a terminal Fed funds rate. And we do think, as the Fed lowers rates, the economic impact, usually we see it with a lag. So 3 to 6 months later, you can start seeing consumer demand pick up. Of course, corporate and consumer borrowing start to pick up as well. And so we do think parts of the market that are more economically sensitive, cyclically sensitive, do have the scope to play some catch up here.
Mona, thank you for coming on. Stay with us. More from Bloomberg Surveillance coming up after this.
You're listening to the Bloomberg Surveillance Podcast. Catch us live weekday afternoons from 7 to 10 a.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Neil Shearing joins us here from the University of York and, of course, London as well. He's with Capital Economics. What's the single headline at the top of your outlook for next year, given the upside-down world of Starmer and the United Kingdom?
Well, the UK is this kind of cold, wet island that doesn't really matter for the global economy, I have to say. I think the Bank of England is going to cut more than markets are pricing in. That's the big call for next year for the UK. I think the big issue globally is whether the US can continue to outperform developed markets. And I think the answer is it probably will, yes.
Is it the AI story, which has been such a theme over the last 2 or 3 years? And I'm not sure if it feels worn out, but there's definitely a little bit more crosswinds, cross currents, headwinds for the AI story?
I think that's right. I think there is a bit more kind of caution, I would say.
Yep.
And you pick that up when you go and speak to clients. There's certainly more caution. But my view is it's got a lot further to run. Whether it's got a lot further to run in markets or whether there's some air inflating in the markets, I think is another question. But in the real economy, I think this is a generational technology. It should be regarded as a general purpose technology. It will transform productivity growth over the long run. And the US is at the vanguard.
You've very publicly written about this. It's in your note for 2026 as well. There is a reality of a sharp disinflation, if not price decline, in China. How is that deflation exported to the West?
Well, profoundly. So if you look at Chinese export prices since 2022, they've fallen by about 20%. Export prices from the rest of the world have been broadly flat over that period, down 20% in China. And this is a manifestation of the overinvestment that's going on in China. It used to go into the property sector. Obviously, property is now on its back. It's now going into the manufacturing sector. And manufacturers are cutting price to shift volume. And it's flooding global markets. And the US has obviously pushed back with tariffs. The rest of the world has not really decided what it's going to do about this.
In your history of central banks, is that enough of a tertiary or secondary idea that the Fed can justify multiple rate cuts?
I don't think so. Not in and of itself, no. It will perhaps knock 0.1%, 0.2% off of headline inflation in advanced economies. Yeah, it's not a big deal.
We call that CFA's teen sweens.
Teen sweens. Don't worry about it. Don't worry about it. So is China a net positive or net negative for this economy here going forward here? I'm just not sure are we selling them stuff? Are they giving us supply coming out of China?
Well, I think we're definitely through the phase where the rest of the world had decided that globalization was an unalloyed good thing, right? That we should embrace it. And I think we're much more cognizant of the downside. Yes, we get to consume lots of cheap goods.
I'm not. I'm still a globalization guy. I don't know.
But I think that the thing that has changed, and they don't teach this in economics, and they should do, is the intersection between economics and national security. And I think that is the issue that people in the US are waking up to, and people in Europe are just starting to wake up to.
So the modern military-industrial complex, is that enough of a fiscal oomph to make nominal GDP in any given country, including the U.S., better than good?
It's probably, in the case of the US, yes, it's providing quite a lot of support to demand in the US. If you look at the share of government spending taken up by the military. See, the big question is, will this transform growth prospects in Europe? And we've seen a big fiscal expansion or planned expansion and fiscal expansion in Germany.
It's talk, though, right? What is the Capital Economics bet?
It's not going to make a big difference. So we've raised our growth forecast for next year from 0.5% year-on-year growth in Germany in GDP to 1%. So it's barely moving there.
Oh, it's unbelievable.
Well, I mean, I don't know. It's growth. All right, central banks. It seems like central banks around the globe are cutting rates, maybe with the exception of the Bank of Japan. How impactful is that for 2026 global growth?
Well, the key question here is that you've got to look at what central banks will do with policy versus what's priced into the markets.
Okay.
And my bet is that the market's got a bit too carried away with the idea of Fed rate cuts next year. US economy is holding up reasonably well. Yes, employment is slowing, but productivity growth is accelerating. Inflation's still probably a bit too high for comfort. You've got a fiscal deficit of 6% of GDP. So my bet is that the Fed does not cut by the 425 bips that are currently priced into markets. In contrast, I don't think the market's quite taking seriously the prospect that we might get lower rates, particularly in the UK, but also in the Eurozone next year.
I did an event yesterday. I'll talk about it later, folks. David Kotok and Kathleen Stephenson, Global
solid.
Interdependence. McKee was there.
Was it?
Yeah,
Okay,
had a conversation with Lau Brainerd.
Yep.
McKee's with the heavyweights.
I know.
And I'm sitting there, and up comes Catherine Mann. I get a big Catherine Mann hug. That's the way they rock at MIT.
Yep.
And it reminded me of the wonderful descent of the Bank of England. Neil, you're one of the greatest transatlantic people I know. Do you embrace that the Fed should enjoy the descent of Catherine Mann and the Bank of England?
Absolutely, yes. So I think that what we've perhaps suffered from with monetary policy and indeed fiscal policy over the past decade or so is perhaps kind of groupthink. So I think to the extent you get some dissent within policymakers, that's a good thing. It should liven the debate. It should sharpen policymakers' minds. It should lead to better policy outcomes.
From where you sit from a distance, the uproar over Kevin Hassett right now. If you look at the debate, can the presidents and the governors push against any given new chairman?
Well, I think this is an existential question hanging over markets in 2026. In theory, one voice in 12 that votes, one voice in 19 on the committee. The question is, how dominant does that voice become, and to what extent can it shift attitudes on the committee? My sense is that Hassett might end up being a bit more orthodox than some people expect. It looks to me, from a distance, like an old school Republican, perhaps talking a good game to get the nomination. But let's see.
How was the economy over in London? What's it like in London these days? How are folks feeling over there?
Well, a Londoner comes to New York. It feels expensive in New York, I'll tell you that. $13 for a sandwich from Pret. It's not that expensive in London. Look, the UK economy is in a place where it's not, doesn't feel terrible, but it's not great either. We're looking at
Isn't that just the norm, though, for England? I mean,
well, it's the north of Europe, I think.
Okay.
Particularly compared to, if you look at the growth performance of the US economy versus not just the UK, but Europe more generally, continental Europe, it's night and day over the past decade. You plot a chart of GDP and look at the wedge that's opened up.
Right. Lisa, can you take Neil to Sweet Greens? For like a pre-lunch?
For a $20 salad?
For a $20 salad. It's like a scandal here.
It is.
There's no
Food
protein.
inflation.
It's just like, it's like the green stuff Lisa eats.
Yeah, well, I mean,
$20.
Yeah,
but I think
in there.
there's an interesting point here where everyone is obsessed with the kind of affordability and cost of living. And the politicians are saying, well, inflation's coming down. And the point is, it's not that inflation's coming down. The price level is still elevated.
And that's not
And that's the issue.
Stephen Roach just wrote a brilliant Substack on this over at Yale University. Thank you for we're going to do more on that. Price level
I know.
hasn't
It's not
come
coming
down. Are you moving to New York?
I wish I was. I can't afford it anymore. I used to live here. I loved it.
Neil Shearing, Capital Economics. Thank you so much for darkening the door. He is from, always, London. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
We go ever stronger in this 8 o'clock hour. Heidi Crebo-Rediker with his senior fellow of Geoeconomics at the Council on Foreign Relations. Heidi, I don't even know where to begin other than is a complete amateur. Paul, let's talk to Mr. Putin.
Yeah.
Shock, nothing got done.
No.
Heidi, did we expect any other outcome?
So I think, it's exactly as you said. This is really, a question over the team that's been sent in, particularly, Witkoff, and believing Putin and falling, again and again for, the dangled promises of investment, while it's clear that Putin is playing for time and hoping for a fracture in NATO. Because this, from the beginning, has not just been about Ukraine. It's been about fracturing NATO, which is a much bigger picture item for Vladimir Putin.
To what extent should President Trump get involved here? I mean, Mr. Whitaker, Mr. Rubio meeting with Putin, that just doesn't feel like that's a recipe for really moving the ball forward here.
Well, you have sort of a divided approach to within the Trump sphere with Witkoff, Vance, and Jared Kushner on one side. You've got Rubio trying to placate to a certain extent and steer the ship back on in negotiations to a better place. And I think at the end of the day, Trump wants to be, he has this core constraint that he does not want a visible Ukrainian defeat on his watch. He wants a Nobel Peace Prize. So I think in terms of his getting involved, he wants concessions from Ukraine, but he doesn't want to preside over a collapse.
Okay, Heidi, it's just us. It's like 42 people listening coast to coast and worldwide as well. Heidi, what would Colin Powell do? What would Robert Gates do? What would Secretary Rice do, or selected other Democratic State Department diplomacy people? Would they go over there and hope for something so that any given president can win a prize? It's like prize patrol. I expect Ed McMahon to show
I think
up.
we're looking at a very different approach to foreign policy, and particularly vis-a-vis Russia. We knew that coming in, when Trump came into office, that he was looking for a very different relationship with Vladimir Putin. I think, looking at ways traditional, strong Republicans and Democrats would deal with this would probably be to make sure that Ukraine, first of all, was in the room. Ukraine and the Europeans have really been completely sidelined in this. It's been a strong man Trump and Putin dividing Europe play right now. And I think Zelensky has it right. There could be a moment for an opportunity to end the war, and there is a lot of diplomatic activity going on. But we have not put pressure on Russia. I mean, the Europeans are putting pressure on Russia, but the United States is really not. We haven't been as aggressive with sanctions. We haven't really backed our allies in supporting Ukraine. And certainly, if the U.S. is putting certain pressure on, for example, India for buying for continuing to buy Russian oil. But it really isn't putting the thumb on the pressure on Vladimir Putin, and I just don't think, absent that, you're going to see any movement.
Okay, so we're seeing no movement. I think Paul and I are asking the same question. Where are we, say, in February?
Well, in February, you mean coming up on the anniversary of the?
I mean, does Zelensky run out of? Serious stuff. Does Zelensky run out of money? Does he go out and sink 6 more oil tankers out in the Black Sea or wherever? Is it a drone war? I mean, where are we in this? I think all of us listening, Heidi, with your wonderful work at the Council on Foreign Relations, the bottom line is we're benumbed by this. Lisa, how long has it been? 3 years? The war's 3 years, 4 years?
3 years, yeah.
I mean, Heidi, Paul, in America, war's 4 years, that's it.
Yeah.
That's what was the problem with Vietnam. Heidi, where are we, which ghost are we fighting in February? Are we just going to have Ukraine run out of money as one talking point?
So, I do think there are more people in the United States and certainly in Europe paying attention to this because, for Europe, this is pretty existential. But there is this ticking time bomb in the background, which is where's the money going to come from to pay for not only the military, the acquisition of arms and the arming of Ukraine, but also just for reconstruction, for paying pensions. And the IMF was just there, and they reached an agreement on a new facility for $8.1 billion, and that's smaller than I think Ukraine was hoping for. And they tagged the financing gap for the next 3 years at $136.5 billion. That is huge. Just in 26, 27, they're looking at 63 billion of a financing gap, which means the Europeans, since the U.S. is not going to be there, the Europeans really need to step up. They either have to pay it out of their budgets, or they have to look to this reparation loan that's been under negotiation for a very long time.
Heidi, we got to continue this conversation. Just brilliant. Heidi Crebo-Rediker, she's with the Council on Foreign Relations. Stay with us. More from Bloomberg Surveillance coming up after this.
This is the Bloomberg Surveillance Podcast. Listen live each weekday starting at 7 a.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
The newspapers. I mean, they're lighting the tree tonight. Are you going to the tree lighting, Lisa?
No, it's a madhouse. It's
a madhouse.
Crazy town.
The tree is almost as big. I don't know if you know this. The tree's almost as big as Scarlet Foos.
Is it? That right?
She has one in the backyard up north of here. It's ginormous.
The tree looks great this year. It looks great every year.
Yeah,
it does. I've done it though. I've done to go and trying to push through people and
that's
get
when you
one
were
picture.
With TV. We were working.
Right.
Yes, exactly. Doing that.
I ice skated there, and the family paid me not to.
Oh.
What do you got today?
Okay. This is a look into, it's interesting one on the terminal. You have to check it out. How more tired Americans are spending more for products that are going to save them time on tedious tasks. For example, laundry. Okay. Yep. Now, my kids have been doing laundry since they were 10, which means a lot of different people doing laundry all at once, which means there's fights over who forgot to move it from the washer to the dryer. Then you have to redo it in the wash because it starts to smell. Moldy. Okay. So enter this $2,000 washer/dryer combo all in one unit that will do it in under 2 hours in one unit. Okay, so more people are buying those. Bloomberg is saying GE sold like 10 times as many as those as they expected. Samsung has one too. So it's more about the products that people are buying to save them time. Like there's a $1,700 oven that can make restaurant quality pizza in 2 minutes.
Really?
So things like that, and how people are paying more for services. Like, for example, they have Walmart Plus. They can come in and they put the groceries away for you, in the refrigerator. So people
I used to have
more.
people doing stuff for me. I don't have people doing stuff for me anymore.
People.
No, I don't have people anymore. So
but would you pay more to save time?
Absolutely.
Yeah, see?
Absolutely.
That's the thing.
Okay.
I think I would, and I'm El Cheapo, so I would definitely do that if it saves me time. Okay, this one is for you, Paul. It's about skiing, okay? So I know this is big for you. So when you look for like alpine glamour, what do you think? Do you think Swiss Alps?
Sure.
That's what you think, right? St. Moritz, it's like this very fancy place, $2,700 a night you could pay. But the Wall Street Journal is saying travel experts are saying go to Idaho. Okay, it's Sun Valley. Have you been there?
I've skied there. It is awesome. It is awesome. It's not as big as some of the other Western resorts like Vail, but it is just awesome skiing. The people are great. The facilities are great. I love Sun Valley. And I went in the summertime. I went there for the Allen & Company conference, which is beautiful as well.
Did you see Gura there?
No, but I did see a lot of media moguls. We got some good interviews out there. But the skiing out there is awesome. And now they have direct flights from the New York area into whatever the town is there. Ketchum or whatever it's called.
So it's not as fancy. Is it kind of laid back, like not as glamorous?
Yes, exactly. Okay. It is not Aspen. It is not Vail, but it is very, I think, very high end, very, very nice. I like it. I'm a big fan.
There
Sun
you go.
Valley. That being said, the boys are going to Aspen this year.
Oh, you are? So for the boys' trip. Okay.
Yes.
Well, maybe you should change it.
Well, we did that. We're gonna do that maybe next year.
All right. Okay, this last story is interesting. Michael Barr actually just touched upon this. An interesting trend just a month after Zohran Mamdani was elected as New York City's mayor. So sales of Manhattan luxury homes actually jumped. This is according to Miller Samuel Douglas Elliman. Buyers signed contracts on 176 homes worth $4 million or more in November. That's up 25% from the deals that were inked the month before that.
It's got to be Wall Street.
This is what it is. I've been working in this town for 40 years. It's never changed. If you're anywhere in the world and you want to park money safely, you buy Manhattan real estate.
And
you're any part of the world, you don't have to worry about the government coming taking your money or doing anything. You just go buy a co-op in the city and, come back 10 years later, it'll be higher value. And that's what's happening, I think.
Yeah, there's condos at, what is it, the 74 in the Upper East Side, Billionaires Row, like those were some of the big purchases out there.
Yep.
So realtors are saying there is no Mamdani effect.
You can't keep Manhattan down, ever.
Yeah,
ever.
I don't disagree. And right now, there's going to be a whole new search.
Yep.
With all of the good tidings on Wall Street. Lisa Mateo, thank you so much. The newspapers.
This is the Bloomberg Surveillance Podcast, available on Apple, Spotify, and anywhere else you get your podcasts. Listen live each weekday, 7 to 10 a.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.